Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Tuesday morning. So remember, tomorrow we've got the FOMC. There is no expectation for rate cuts. There frankly has not been. That has not been a meeting where the expectations were for any movement from the Federal Reserve, which means all the excitement is going to be in that press conference. So heads up for that, and we'll continue to see what it is equity markets are going to do in front of Jerome Powell, in front of a hold. And, I would even say right now, based on what we're seeing in the equity markets, Fed fund futures are suggesting we won't even see a cut in June. It is pretty much all for the July meeting. So please don't go into tomorrow thinking we're supposed to get a rate cut. That's just chatter. That's not rooted in the data. So we can move on to what is moving. Probably the most notable things, and I was mentioning this in the top tier outlook, probably the most notable shifts are that the downtrend in, let's pull up the ES, the downtrend in the S&P, the NASDAQ, these have shifted. And here's the important shift. Indicators are on our charts for a reason. They should be there to answer questions. What does that mean? Okay, Rag, is this a downtrend? Is it chop? If it's chop, is it bullish chop? Is it bearish chop? Where are we in terms of levels from which we could attract buyers and momentum? What levels are we expecting price action to stall at? These are the things that indicators should ideally answer for us. And for me, 1, 2, 3, 4, 5, the sixth, don't worry about it's a down day, right? Even in strength, we have down days. A lot of times traders look a little too myopically at price action. Step back, look at the last 5 to 7 candles, look at the overall trend. The downtrend for now is broken. But I think the most important thing that I see that I want to point out on this chart is the fact that we are still below these white dots right here. And being below those white dots right here tells me that we're still in that bearish hemisphere. We haven't broken out to where it is considered to be generally more bullish, where traders would consider, hey, we're above a certain level and now the sentiment shifts. And we're not at that sentiment shift quite yet. So that's not there. The other thing that I want to take a look at with you all are 2 commodities, or actually 3. One is crude oil, which continues to generally be heavy. But one of the things that is interesting is that even though this is still a downtrend, there's this huge level of support right there. And you can see we hit that level of support here, and we pretty much hit it again. So I'm not as bearish crude. Now all my cards on the table, we have an open crude oil position. We've already taken profits. We've moved the stops to break even. This is where once I've hit that T1, I still have T2 and T3 in the back of my mind, right? But once I hit T1, I know that the heaviest lifting for my trade is done because A, I've paid myself, and B, I've reduced risk. So once I hit that T1, there's definitely a shift in the psychology for me as far as what's next. Do whatever it wants to do, break even, stop, whatever. I'm not worried about it. I will say, if you are bearish crude oil, heads up, because this level is holding as support, and the higher we can bounce, the more we can go back down and maybe realize a profit on the retest of this support level. So yes, I got a winning trade in crude. No, I'm not expecting a whole heck of a lot more. And I've already done my job to protect risk. Think about this, gang. And I teach this in the Sector Secrets Mastery. And it's a huge shift that I made in my trading many, many years ago. And that is your T1. What is it not about? It's not about doubling your premium. It's not about new highs or new lows. It's about at what point can you shift away from risk to your account. That's the shift that I made a long time ago. And boy, it frees you up to get greedy. So let me talk about another setup. We're long gold. In fact, we have GLD calls. Some of our traders are in GC or MGC futures. And so what we have here is a trade that has hit T1, right? And then yesterday we scaled that at T2. By the way, after T2, we kept rallying. I still have a T3, and I still have until the 16th of May before I have to worry about closing this trade out because of expiration. So my T3, I'm going to hold out for a long time. T1 was a nice trade. It was from $6 to $8, or from $600 to $800. Our T2 was $1,260. Look at the difference between a T1 profit and a T2. The problem I find that most traders struggle with is that what they want is T1, right? And this is where they get into trouble, because they might have a nice $800, $900, maybe $1,000 profit. They don't take it. It goes back to 600, and then it goes maybe below 600, and it becomes a loss. This is a very common tale, and some of you out there might be going, Rog, been there, done that, maybe still doing that. So think about that T1 in this new way. And then now this frees you up to get greedy with T2. And if we continue higher, this is going to be a whole lot more. This is already a 2x trade, right? I'm not ruling out that this before May expiration, the third Friday of this month, might be a 3x trade. Super stoked about that. So notice the expectation on crude oil. Took the T1. I don't have a lot of expectation for more. And if it gets to T2, great. But if it doesn't, I have planned ahead for up to 3 scale outs. So that's what's happening in gold right now. I'm coattailing gold with Wheaton. Wheaton's doing okay. Again, hit the T1. Now I can say, all right, after this, it's all gravy. I've done my job. Put the trade on and manage risk. After that, again, please remember the reward part of the trade is not up to us. The only thing we decide is all the risk parameters, right? Where we enter, how much we enter, and how much we're going to risk. So once we cover those 3 things, that's the job. T1 sort of relieves us of that sort of duty, if you will, and now we can shift into greedy mode. And so WPM would be in that mode. Walmart's another example, again, of this T1, T2, T3 type scale out. Walmart, May 16th. At this point, we've hit a T2, and now it's really going to be, well, how much more can we get out of this? And having bought Walmart at initially, what did we buy Walmart for? $4.50. I think I bought some contracts at $4.40 and $4.60. So I'll just say, call it around $4.50. All of our members, basically get in around the same spot, because we do setup alerts, not fill alerts. So everyone knows the setup before the trigger, and then everyone can get in once that trigger is reached, not waiting for me to tell them after. And consequently, a lot of our members get even better fills than me, which thrills me to no end. We scaled out from $4.40 and $4.60 at $6.10. All right, is that exciting? $4.40, $4.60 entries to $610. It's all right, but that's T1's job. Yesterday's scale out was $9.10. See how those T2s are what are going to be that really big jump in the growth. That's oftentimes that doubling of premium that people seem to love. Now, is 90% not as great as 100? Of course not. These are arbitrary metrics that we like to have because they feel good. I remember back in the 90s, I was on this day trading floor, and the guy next to me said, I take $1,000 wins. I said, what if the market moves $2,000? What if the market only moves $950? You don't take those? I take $1,000 wins. There's a name for people like that. They're stopping to pick up, they're passing dollars to stop and pick up pennies or dimes. We don't know what the market's going to yield, so we always accept, it's a job, the unpredictability, the uncertainty. Well, sometimes that uncertainty serves us. We have stop losses for the uncertainty of the trade not holding the levels that we thought. And we have the uncertainty of, hey, this could go a whole lot more than I even thought. So those are the things we always want to plan for and have contingencies for. Yeah, it's more fun on the reward side. But one of the things a lot of traders do, and this is probably the most common question I get in the mastery, Rog, I got in at 440 and I got out at 660. I wasn't sure if it would keep going. So that's why we have the tools that we have. If the candles are green, if the trend is up, if we're above the equator, if we're bouncing off the daily price movement range pretty consistently, right? Trust that the probability is for more upside, right? Trust that the probability could yield higher highs. And it takes some time, but if the visual cues are there and you train your eyes and you train your mind to pick up on that, following the trends, following the movement, becomes a whole lot better. And yeah, in this case, I would love to see, again, we're already at a 2x. I'm not doubting in any way we might see a 3x. We'll see. Again, that contingency for more reward is covered, but then the contingency for, well, what if Walmart gaps down? I don't know. Who knows, right? No problem. We've already paid ourselves twice. We've reduced our position. And if I get stopped out, I've got a trailing stop, right? The only thing that's the uncertainty that affects us all are our gaps, right? The gaps are things that we all have to deal with. Sometimes they're gaps in our favor. Wonderful. Sometimes they're not. All right. That's where I am right now. The day trading has been pretty decent. We're having some pretty active days. I'll give you an example. On Friday, we had gorgeous SPY and DIA calls on that day. I think both of them doubled throughout the day trading day. And yesterday, I didn't have a trigger. That's the way day trading can go. Every day, I'm open to taking a position, but if I don't get a trigger, I'm not going to force it. And here's what's great. By then switching to having a swing trading type approach too, well, if my day trading is not really doing what I want it to do, it's not worth putting my capital at risk. My swing trades are out there, growing my account, doing what they need to do. So those are ways that we won't feel the need to force trades. So the opposite has happened too, where the swing trading looks awful, but the day trading is good. So I'm not going to force the swing trades. I have another strategy. And then really through Q1, my day trading was meh. My swing trading was not as active as I would like, but the position trading was fantastic, right? We were able to build long positions in Walmart. We were able to build long positions in Altria. I was able to build long positions in Coke. So this was fantastic. And in XLC. So these are all things that were great in Q1. So I had yet another style that once I was done day trading for the day, once I'm done with my swing trading for the day, I can then switch to the next gear, which is, hey, what kind of position trades, outlooks of 6 months to multiple years? When everyone's panicking, probably the most unbelievable, and I don't talk about this one nearly enough, but long SPY from 483 was an alert in our room for that position trading. That's a monster trade, right? So I might have been disappointed that the swing trading wasn't as active. I might have been disappointed that the day trading wasn't as active. Then I've got things like this that are absolutely fantastic. Think about the 3 gears, and your gears might be different. You might say, Rag, I want to scalp and I want to whatever. Whatever those gears are, there's so many choices we have. And when we embrace those different time frames, 5 minute for day trading, 1 hour or daily time frame for swing trading, and the weekly chart for the position trading, these position trades that can last 6 months to years, all of a sudden, there's always something to do. May not be what we want. I think we all have a favorite, but there's always going to be something to do. And that's really the goal of what we try to do with our trading, right? Have an opportunity, have that pipeline full, like any business, right? What does a business want? They want leads, they want customers, they want traffic. That's the job for us, right? Running this business of trading. All right. If y'all have any questions, feel free to type them on in. I'm always taking a look at the chat windows. Phone lines are open for your requests. Let's go ahead and take a look at a couple of those other commodities I mentioned. Another one is copper. Copper has been trying to maintain some support. And the more copper can look like it's maintaining support, there might be a little bit of economic optimism around that. Might be too soon to tell, but we might start to see a little bit more movement, favorable movements, too soon to tell, in things like XME. And these would be stocks like X and Freeport-McMoRan, FCX, STLD. There's a number of names, Rio, RIO. So, these are names that we can keep an eye on. Rio has my attention. I'll show you why. RIO. Was it RIO? Oh, okay. STLD. Sorry. This one could be an interesting oversold bounce play. So that one might be, it's a little early, but these would be things that I'm possibly interested in going forward. If you watch the Top Tier Outlook, you saw me put together a watch list of over 40 symbols. Of those 40, I'm looking for the criteria of not only the structure to remain valid for what it is that I want to do, but then also for the setup. to actually appear. So those are things that the watch list is the net that I've cast. Or even probably a better analogy would be the watch list is, if we're fishing, the lake or whatever, the lake that we've shown up at to fish, right? Once we get there, we might work some shorelines. We might bottom fish, who knows? But that watch list is a big group where there are opportunities, but not all of them, right? And we want a very specific criteria. If you checked out the watch list, then you saw the watch list that I built with you all was a bullish watch list. My long calls have outperformed my long puts by a landslide. It's not even close. It's not even scratch your head. Well, maybe. No, long calls continue to outperform the long puts. You know, I had an image that I wanted to share with you all to kind of drive home this idea. And I don't know if I have it handy or not. But to drive home the idea of just how important having a generally bullish outlook is. And here it is. Here it is. This is not my image, but it's a brilliant one. Let me show it to you all. And what this image is something that we talk about a lot, which is the brevity of time. It's just really ridiculously brief how little time that stocks remain in some sort of downtrend or bearish environment. So for as much as it's talked about, the time that stocks are bearish, and this is a log chart that goes back to 1933, okay? The red are the number of years of the price duration of how long we're weak. Look at this, gang. I'm not saying to just never buy puts, and I'm not saying to never short, but when we're looking out over the expanse of time, that would probably affect our weekly charts more so. So when these crashes come, like what we had, this year, sure, don't buy into all the ludicrous, every one of these reasons, I'm sure, from 83 to 2003 to 2013, all of these, I'm sure, had reasons to say this is the end, we're never going to recover. That's what gets people glued to television. That's what sells newsletters. That's what sells books, right? The fear side of things. Look how wrong they are. And look how long they've been wrong. So when I hear these people talk about this crash coming, they want attention. And it's a really insidious thing, because not only are they just trying to get attention, they're actually creating an opportunity cost, right? Because if people are scared, they're not going to buy. And that to me is, forget being wrong, right? Oh my gosh, and you're inverted yield curves. Okay, what's your position? That's what and hold me to the same standard. And I tell my members the same thing. Rog, we need more analysis of what's going to happen. Like, we need a hole in the head. Tell me what you've got. Because when people come out and say, oh, I've got some kind of idea about inverted yield curves or because of tariffs, you know what I never hear? What position do you have on, pal? I watch these podcasts, like I'm sure a lot of you do too. And there's all this demise of the dollar stuff right now that seems to be in vogue. Fine. Okay. What's your position? What's your position? And they never get there. They never get there. Oh, well, that's why we like Bitcoin. From where? How much? What's your portfolio look like? That needs to be the normal conversation here. I've shown you my positions because you'll say, gosh, Rog, okay, you're bearish crude, you're bullish some staples, and you're long gold and a gold mining stock. Okay, got it. What else are you long? Walmart, Kroger, that's another one that I'm long. You're long puts. Okay, got it. But you're not in the mags. No, I'm not in the mags. You're not in energy. No, I'm not in energy, right? That's got to be the way we think about our own positions. And that's the level we should expect from other folks. Believe me, I'm telling you right now, gang, you don't need more analysis. You need folks to say, this is where I'm looking, and these are the positions that I've got. So if you go take a look at the Top Tier Outlook playback at the Simpler Trading YouTube channel and at my YouTube channel, Raghee Horner, you will see how I put that list together. It's not probably the way you think. I'm not using a scanner. I'm using a simple layout. I'm using a process of relative performance. That's what makes the process unique. Check it out. It's easily replicable, and it's something that I know that you are able to repeat on your own. So what am I doing right now? I'm looking at managing Kroger. So part of right now will be waiting until the FOMC. Raghee, you going to put positions on in front of Powell? Oh, no. Let's talk about timing this week. You know what I've got long in? They're gangbuster trades, but I'm now hitting the pause button. So the next thing I'm going to do is wait for Powell, see if he wakes up and chooses violence tomorrow or not, and then we'll see what that next round of trades are after that event. Okay, gang, as always, thanks so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station. Be good to each other.